Everybody, Dave here in Freedom Investing. In today's video, we're going to go over IBM. We're going to look at the Q2 earnings for 2020 and can kind of compare that against the 2019 Q2 earnings. Kind of look at the different business segments, which ones are having trouble, which ones are doing well. They got a new CEO. They did some mergers and acquisitions, and kind of just get an idea of why this stock is hated so much in the dividend community. So it's just not a very popular stock for some reason. You bring it up and people pretty much will kind of pick on you. So for some reason they treat it as a Kodak. So let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. Alright, we have IBM's Q2 2020 earnings press release here, and we got revenue of $18 billion, down 5.4%. And we also have the cloud cognitive software revenues up 3%. And total cloud revenue $6.3 billion, up 30%. So that's big. We like that. We like to see that. Let's see, total cloud revenue $23.5 billion over the last 12 months. That's up 20%. Red Hat revenue up 17%. And we have net cash from operating activities, $15 billion, free cash flow of $11.5 billion over the last 12 months. Here's the different segment breakdown. Cloud cognitive software, which just includes cloud data platforms, which includes Red Hat, cognitive applications, transactional processing platforms. Revenue $5.7 billion, up 3%, with growth in cloud and data platforms up 29%, and led by Red Hat. So if you think that was a bad purchase, I don't think so. Cloud revenue more than doubled. And we got the GBS here, which is what they call it, GBS, Consulting, Applications Management, and Global Process Services. Revenues of $3.9 billion, down 7%, driven by declines in application management and consulting. Cloud revenue up 12%. They did talk about that in their earnings call. A lot of the companies are just not expending capital on CapEx. And obviously if there's not going to be any implementations or anything like that, they don't need the consulting, so that kind of declined. But they did make up for that in some of the other segments, and we're going to talk about that here in a second. We got the GTS here, includes the infrastructure and cloud services and technical support services. Revenue $6.3 billion, down 8%. Cloud revenues up 18%. So you kind of see a little bit of a trend going on here. Cloud's mentioned in almost every one of the business segments, and it's either doubled or it's up. So that is good news because that's the direction they're kind of headed a little bit. So systems include systems, hardware, and operating systems. Revenue $1.9 billion, up 6%, led by IBM Z, and then up 69%. Let's see here, storage systems revenue up 2%. Power decline. Cloud revenue up 22%, and gross profit margin up 430 basis points. So there's cloud revenue mentioned again, and it's up. And here's the actual revenue. Cloud and cognitive software, which we talked about above. Look at this here, $5.7 billion, and that's up from a year ago. Last 3 months of the last quarter of 2019, $5.5 billion, so that's up. We got the GBS there, which has shown a decline there from a $4.1 billion down to $3.8 billion from year over year. And then we got the GTS here, which kind of almost is flat, but it's still down about, what, 500 million or so. And systems, we got an incline here from 1.7 from 2019 up to 1.8 billion for 2020. And then we got the global financials there, which shows a little decline as well. So total revenues for, let's see, Q2 of 2020 is 8.7 billion. That is a slight decrease from 2019 of 9 billion. We got the gross profit margin here, cloud and cognitive software, 77%. That's humongous. So they're really taking advantage of those cloud services and those cloud applications. A lot of customers are starting to push the cloud, develop applications for the cloud. And IBM wants to take advantage of that, and guess what? The profit margin is humongous there. So we got the GBS there is 28% for profit margin. It's increased actually from year over year. And then we got the GTS there at 34%, which has pretty much remained flat. That is also a declining business segment as well, which they're making up for in the cloud space. And that cloud space is almost double, or it is double what the GTS is. Systems actually increased. They actually had a pretty good quarter on that. 57% profit margin, pretty good there. Global Financial we talked about above, I don't even know what it is, and it's showing 38%, which is still an increase from a year over year. And the total gross profit margin is 48%. Looking here at the expenses and other income, we got R&D here. They spent a little bit more money for some reason on Q2 of 2020, 1.5, almost 1.6 billion compared to a year ago, 1.4 billion, and that brings the total expenses up to 7 billion compared to a year ago, about 6.2 billion. And we got net income here of 1.3, almost 1.36 billion, and we have a year ago 2.498. So that is a substantial decrease from a year ago. And we are in the middle of a pandemic. They are seeing a little bit of an issue in some of their business segments they talked about. A lot of that had to do with customers not spending on CapEx, which is the exact same thing I talked about in the Cisco video that I did. If you want to take a look at that up here, they ran into that exact same issue as well. So looking down here, we do have cash on hand of the $12 billion, total current assets 39 billion, and we got total assets of 154 billion. That's compared to last year's 152 billion. Total liabilities have increased just a little bit, and from 37 billion up to 38. We got the total liabilities there, 131 compared to 133 for this year. Free cash flow there, 2.2 billion compared to last year's 2.3 billion. If you're enjoying this video and this acquisition of Red Hat, go ahead and like and subscribe and hit that bell notification. So what is IBM? Let's not really go about the history of IBM. I did another video, top 5 tech stocks, and I threw IBM in there. If you want to look up more of a history of IBM, I'll just link that up here if you want to take a look at that. Let's just go through a little quick history of it without digging too deep in it. Okay, it was founded in 1911, all right, and it wasn't even that they were doing computers or anything back then. It was something completely different, all right, punch cards and all that. 1960 to 1970. They had a lot of mainframes. They were known for mainframe systems, and still to this day, they're probably known for mainframes mostly. And then, they also got into AI years ago. They're made popular, by 1968 film, 2001 Space Odyssey. Watch that film if you haven't seen it. HAL in there, obviously stands for IBM. If it shifted one letter to the left, it stands for IBM. So if anybody talks about AI, IBM is the first thing that comes to my mind, all right? And we're not even talking about, NVIDIA, we're not talking about Intel or anything like that. Anytime anybody ever mentions AI, IBM is what comes to my mind, all right? So they have a lot of presence in AI space. If we take a look here at their products, look at this vast number of products they have here, okay? DB2 is another thing, that's a database that they're well known for. Their cloud space is something they've been working up, I'd say maybe for the last 5 years or so. IBM Z is one of their hardware platforms. We got blockchain here, which I wasn't even aware they were doing blockchain stuff. Big data analysis, I wasn't aware they were even doing that. And we got kind of the security stuff, which they actually just recently bought a security company. And we got a lot of stuff, like I said, happening in the cloud space here, containers, databases. Part of that is fueled by the Red Hat acquisition here. IT infrastructure, which I probably know them the most for because I worked with IBM computers back in the mid-80s. I also supported IBM servers and IBM storage in my career now, back in like 2007 or so. We got a lot of their stuff here. They're kind of, a little bit known for their Watson. Now that's named after Thomas Watson, which is the founder and also the first CEO of the company. Okay, that is not related to Dr. Watson from the Windows debugger system, okay? which I believe came from Sherlock Holmes. All right, so here's all the different industries they are in. Government, I had worked with some government systems, IBM systems, okay. I have also worked in the commercial space with some IBM products with the Regattas and their mainframe systems, okay, and that was Kaiser Permanente. They had a, that was probably the only company that I ever worked for that actually had a mainframe, and they still used it. So like I said, they pretty much dominated the mainframe space. So these are all the areas they're in. I mean, this is a lot of stuff here, okay? Machine learning, they're in machine learning, artificial intelligence, all right? So that's what they're pretty much in. And obviously, like I said, they're most known for mainframes and all that. So looking at the chart here and kind of some of the financials, is $109 billion at this point, almost $125 per share. Income is about $8 billion, sales revenue is about $75 billion. We got a dividend yield, 5.25. That's the reason why we love this stock. It's a big dividend payer, and guess what? It's a dividend aristocrat. You may have not known that, but this year they became a dividend aristocrat. I know a lot of sites out there say that they're not, but we'll kind of look at that here in a second. That's a lot of freaking employees. And I think actually just recently they laid off quite a few of them silently, quietly. I think they laid off, what, 2,000 or 20,000? I can't remember. PE, forward PE is 10. We got the gross profit margin there is 47%, operating margin is 9%, and profit margin is 10%. We got the payout ratio of 73%, and we have a year-to-date performance of -7%. Beta is a little bit higher than what we want, but it's 1.15. So looking here at Seek and Alpha, the dividend yield is 5.25%, and we got the payout ratio is 58%. That's actually showing different than what Finviz shows. 5-year dividend CAGR is 8.63%, and the dividend growth is actually wrong. It shows 21 years. It actually is 25 years. We go back here, I think the streak started in 1996. Let's see here. So the streak started in 1996. Now in 1997 and 1999, they actually had a stock split both of those years. So if we go back here and look at the dividend history, this started all the way back, and I think they started, what, 1913. So that's when they first started paying a dividend. Now obviously the streak didn't start back then, but the streak started in 1996. So we'll scroll up to 1996 here. So here's the 90s, and you can see here 95, and we got 25, 25, 25, 25. So that's not where the streak began. And we got 96 here, 25, 35. So that's where the streak actually begins. And we also have right there in 97, we actually have a stock split, so you can kind of see it go down. And then 98, it goes back up. And then 99, we had another stock split in 1999. And for some reason, some websites count the streak starting at 1999, and that's what Seek and Alpha is doing here. So that's the reason why I have 21. So it is 25 years. It is this dividend aristocrat. There's only one other tech company, which I don't even really consider a tech company, as a dividend aristocrat, and that is ADP. All right, automatic data processing systems, which I talked about in the top 5 video, which I linked earlier in this video. Here's all the mergers and acquisitions, and this is only counting them, I think, from early 2000. Let's see. Obviously, they had more. If you go back here, 1912, all the way through the 1900s, and then here's all the ones from the 2000s. And this is a lot of mergers and acquisitions. Okay, and they've already purchased 2 companies for 2020, which you didn't even hear about. Okay, now if we scroll down here and look at those. So the 2 that they purchased for 2020 is Spanugo and WDG. So that one's a cloud-based security posture management solutions, and they also acquired WDG automation and advanced AI infusion, automation capabilities for enterprises. So they're bulking up their cloud systems, and they're bulking up their AI, because that's where they see the future is going. And I also see that as well. That's more diversification from where they had been. The company gets forgot about. Nobody even really knows about them. If you're born after, say, 1980, like I said, you probably didn't even know who IBM is and what they do. If you're born before that, you kind of maybe worked with IBM before, maybe worked on one of the computers, and you understand that they're pretty big in AI. And now they're getting big in cloud, and that's the biggest thing for them going forward, that purchase there in Red Hat. So the big one there being 2018 Red Hat, and that was $34 billion. That was a big news event there. And they provide a Linux distro, and it's probably one of the most popular Linux distros out there, enterprise supported. So that purchase there in 2018 of Red Hat was engineered by Arvind Krishna, which is their new CEO that took over earlier this year in 2020. And he's been with IBM since, I believe, the early 90s, 1990, I think. So he's been at the company a long time. He knows what he's doing. I feel very comfortable with that. Now their previous CEO got them this far, and she had been with the company very long as well, I think since the 80s. And so they're hiring from within. They didn't find an outside CEO or anything like that. And not to mention, the CEO here is the person that went after Red Hat after that acquisition. So I think he has a bigger plans for Red Hat. They did talk about on the earnings call about Kubernetes, and they saw a little bit of a driving factor towards customers going to Kubernetes. Okay, and that's a container system. They also talked about some of the questions and answers on the earnings call. Basically, some person mentioned, oh well, are you poaching any of your customers that were already existing customers and moving them over to Red Hat and the Kubernetes and all that? Theoretically, where you're seeing an increase in the Kubernetes and Red Hat solution, which is kind of not really getting a new customer, right? So net new. Yes, they did see a little bit of poaching from their other systems, so they did still see an increase in net new as well, and that's kind of key there, okay? So I do own IBM in my dividend portfolio. I've done, pretty much videos. I haven't really done a video specific on IBM. That's why I came out with this one. And we scroll up here, let's see, IBM, there's IBM right there. So IBM right there. I got over $7,300 invested in IBM. My cost basis is much lower than that. Cost basis is $117. Right now we're at $124 per share. I'm up 6.65%, $460. And if we scroll to the right here, we do know that it pays a pretty decent dividend at 5.26%, 5.22%. And we got my yield on cost, if you want to know that, really doesn't matter, but it's 5.5%. And the 5-year dividend CAGR is 8.63, and I actually think that's pretty good. Given how high the yield is here, I think that the 5-year dividend CAGR is pretty acceptable. The payout ratio is a little bit higher than what we probably really want, but it's still acceptable. They're not focusing a lot of money on growth, probably because they had been a company that wasn't really growing much. They focused on the dividend, but now guess what? Maybe they're starting to invest a little bit more money into R&D and a little bit of money into growth. They're starting to work on that cloud solution, the AI, which is probably where the future is going to be at. So they're spending a little bit of money in those two segments there, which is going to better diversify IBM and make them a bigger player, maybe make them well known again, and not forgot about like Kodak. So I think IBM going forward with their new CEO, them spending money in R&D in the cloud space, in the AI space, I think that this company going forward is a hell of a bargain right now. And I'm going to be picking up more shares. Now obviously, this is my opinion and my opinion only, so please do your own research. So with that, let's go ahead and end this video. If any comments, questions, or concerns, go ahead and leave me a comment below. Go ahead and like and subscribe. We'll see you in the next video. Thanks for watching.